All right, welcome back to another AutoTrend system trade review video. In this video, I want to go over a couple of very simple trades that we had on the 1 hour chart of gold futures. So you can see them here. We had a long trade and a short trade, and I want to go over the exact workflow that we were using to trade with the AutoTrend system, the signals, the different tools, how we're taking profits, how we're placing our stop loss, and all of that, and essentially how we're putting together a very clear and systematic plan that we can trade day in, day out, and we can rely upon to make good decisions and good trade management. So let's zoom in here so we can analyze this trade. So as we can see, we had a new trend change to the upside. So we had the AutoTrend system changing its color from red to blue. That's an indication to us that the ATS has detected a potential trend change, and we can at that point set up a trade plan on how we can benefit and how we can join this potential new uptrend. So this is the candlestick. This is the very first candlestick that changed its color from red to blue, and this is called the signal bar. That's step number one. Step number two is we need to have confirmation by the price action. What do I mean by that? For confirmation, we need to see the high of the signal bar being overtaken or broken by a next bar. So as you can see here, the high of the signal bar is not broken until 1 to 3 hours later from this candlestick, right? So at that point, our trade idea is confirmed, and we can go ahead and place a buy trade on gold futures here, right? So that's our entry. Our stop loss needs to come from the very last swing low before the signal change, right? So, or the trend change rather. So what do I mean by that? Well, you can see how price moved down, up, down again, and then up. And at that point, we had our trend change. Well, the very last swing low before that happened was right here. So our stop loss needs to go just below here, right? That's quite simple. That's quite systematic. That's how we're doing our risk management. So that's our stop loss area right here. That's good so far. We have our stop loss, we have our entry. What about our take profit target? Where are we targeting with this trade? Well, that's where the dynamic profit levels indicator comes in. You can see these dashed lines on my chart. This is the dynamic profit levels, or DPL for short. So the DPL basically plots these very strong support and resistance levels on our chart, and these are plotted automatically. They're calculated and plotted automatically using a rather complex mathematical calculation. That's not important because it's doing that behind the scenes, and it does that automatically for every chart. So I simply place the dynamic profit levels indicator on my chart, and these dashed lines appear there automatically, and we're using those as profit targets. So for example, let's say I was in this trade, my first profit target would be the very next dynamic profit level that price will have to encounter on its way up. So that's my first profit level target. And it depends on whether you like to scale out your position in parts or all at once. Me personally, I like to scale out of my positions. So let's say I have bought 10 contracts here on gold futures. As soon as price hits my first profit target, I like, for example, to scale out in thirds or in halves. In this example, I'm going to be scaling out in halves. So I will be taking my profits. I would be selling half of my position as soon as price hits my first profit target. So if I bought 10 contracts, I would be selling 5 of those contracts to lock in profit on half of my position. And then I let the trade run for the next profit level target, which is the very next dynamic profit level, right? The next blue dashed line or blue dotted line that price will have to encounter on its way up, right? And this happens right here. You can see how price moved up, hit the dynamic profit level, and then retraced. And it did that on several occasions. It did this once here, once again here, once again here, and here before it finally broke up to the upside, and then it used the dynamic profit level as support. That's what I mean when I'm saying that the dynamic profit levels are acting as quite strong support and resistance levels. So if we're in a trade and we're hitting one of those targets, one of those strong levels, then we want to think about either scaling out of our position, so selling a part of it, or an entire of my position, the entirety of my position. Me, I like to scale out in partials because these levels are quite strong and they do have the power to reverse price, as you can see here, right? So I don't want to wait for a new trend change level. Instead, I want to exit proactively. So I want to see what happens. If we see that we're hitting one of those levels, then I can go ahead and exit my trade at that point. So that is a good trade scaled out in two parts. And then simply I'm waiting for a new potential trade setup to appear, which it does here. You can see how the candlesticks changed from blue to red. That's an indication by the AutoTrend system that a new downtrend is now commencing. So we're starting a new downtrend, and basically I would just need to repeat the exact same steps that I did to find my entry on the long trade. I would simply reverse everything for the short trade. So let's zoom in here to see exactly what I mean by that. So this is the first candle to change its color. This is our signal bar, right? We were blue, now we're red. Very simple, very visual. And we get this little arrow here to basically highlight this color change. So that's step one. If you remember, step two is we need to see confirmation by price action. So we need to see the low of the signal bar being broken by a next bar. And thankfully that happens right away. On the very next bar, it comes and it breaks below the low of the signal bar. So our entry is confirmed at that point, and we can go ahead and take that trade. As simple as that, really. And our stop loss needs to go just above the high, the last high to be formed before we had the new trend change. So you can see how price moved down, up, and then down again. This right here is our stop loss. So we can place our stop loss just below, just above the previous swing high, which is right here. So that's done. That's how we define our risk. Next step, we want to see where our first profit target is. And our first profit target is right here. It's the same profit target as we had for our long trade, but now it's all in reverse because price is coming from above. If price is coming from above, then we're using this same dynamic profit level as our first target for a short trade. Right here. So price went down, it moved a bit up and down, sideways, just as natural price movement does, and then it went ahead and hit our first profit target right here. So that's half of my position done at that point. My second profit target would be down here. Of course, this hasn't happened yet. So let's say again that I have shorted 10 contracts here on gold futures, and I have taken profits on half of them here. What do I do at that point? I have locked in profits on half of my position, and I'm waiting for my second profit target to be hit, which is all the way down here. But how do I protect my remaining contracts? Well, I do that very simply by moving the stop loss at that point of the remaining of my position to break even. So I'm not only taking profits on half of my position, but I'm also protecting my open position, my remaining contracts, by moving their stop loss to break even. So at that point, I really can't lose on this trade because I have already paid myself and I have completely eliminated the risk by moving to break even for the remainder of my position. All right, so I cannot lose on this trade. I can only make more money on this trade, which is a very good position to be in. But of course, not every trade works out like this. You need to do your risk management and your trade management so that you can place yourself in the right position to be able to benefit when these opportunities appear, and they appear on all markets and on all time frames, right? So that's basically summarizes it for this trade review. We had our first trade here. It hit both our profit targets, so that was around 80 points in total profit, in potential oh, actually that's not 80 points, that's 111 points, sorry about that. So that's 111 points in total profit. Obviously it depends on whether you're scaling out or you're taking all at once, right? But that's the available total profit that this trade had to offer, right? And then for this one here, that was so far, remember, it still has room to run here, but so far that has an open profit, let's say, of 46 points of available total profit up until this point for the short trade. So that's basically it. You can see it's rather simple, very systematic, and there is no subjectivity involved in it. That's how I like to trade. I like to have my rules all defined in advance, so that when the time comes, when I get a color change, when I get new signals, I can then go into my charts and know exactly what to do. I know how to define my risk, I know how to find my profit targets, and I know how to manage the trade regardless of what price action does. I'm not trying to understand what's going on the chart, because I already have my rules well planned out in advance, right? My strategy is already there. All I have to do at that point is execute, and life becomes a lot simpler when it comes to trading when you already have a plan and a strategy all laid out in advance, and all you have to do is follow it, right? At that point it becomes rather simple and repetitive. And that's how you want your trading to be. Simple and repetitive is good. Hard and complex and unique every time, that's not good, because then it opens you up to subjectivity, bias, psychological issues when it comes to trading, and that can only hurt your progress in the long term. So I like to keep everything simple, everything is systematic, everything I do is systematic, and everything has very clear rules that I can follow day in and day out, regardless of what I'm trading. Whether it be gold futures, whether it be indexes, stocks, forex, and on all different time frames. I can be trading the 1 hour chart, 1 minute chart, I can be trading the 15-minute chart, the daily chart. All of these things repeat exactly the same way. If I would hide the time frame here and I would be pretending this is a 1 minute chart, none of my rules would be any different, because I would be doing exactly the same things. And that's because price action is fractal. It appears the same way on all charts. And that's another highlight of my system, is that it can be used on all time frames and on all markets. So whether you like to trade one market, or you're comfortable with a certain time frame, or you don't have much time to trade and you like to trade more long term, the rules are the same. Nothing changes. It only depends on your preferences. All right. So thanks for watching this trade review video. I hope it was helpful. I'll try to make some more in the upcoming weeks. If you have any questions, let us know, and we'll be happy to help you. And yeah, thanks for watching, and I'll see you in the next video. Take care.